But you think another trillion in market cap from here?
I mean, Kel, I think the golden goose is autonomous. I think that's worth $1 trillion in terms of valuation. The federal roadmap will now start to get paved. And that's ultimately from a valuation perspective. I think autonomous and robotics is more than the company itself. So I get some of the brand issues and maybe some of the headwinds in Doge and, in terms of everything Musk is doing in the Beltway. But this continues to be the bet for the ages in terms of Musk betting on Trump, and that's going to hugely benefit Tesla. And that's why we think there's golden buying opportunity in terms of this sell-off.
So I'm sure that investors in the stock would agree with you. The ones who have been in this, they're passionate, they're committed. Of course, they think, autonomous is the play here. But I still see a lot of frustration on social media about the performance lately. And even a couple of hours ago, Musk was tweeting about how the Boring Company is building a tunnel in Dubai or something. I mean, he has a lot going on. Would they prefer that his focus is more on Tesla?
Yeah, look, I think a few years ago, that would have been the preference. But I think the reality is, even some of the stuff Seema talks about, everything we're talking about in terms of AI, having that front row seat at the table, in that Trump administration, that's bullish in terms of AI innovation. I think more and more projects, especially that come through and that he's going to drive, I think is going to be very important in the China tariff discussions. And they have a massive innovation line coming out in terms of Optimus, in terms of autonomous, everything we see with Austin in terms of June. So look, haters are going to hate as they always do in Tesla. But I just think this sell-off here, I think it's just a massive buying opportunity given we see a $2 trillion market cap on the horizon.
Tesla shares are down 27% off its 52-week high when I'm recording this. Tesla stock increased after the elections in November, and now Tesla investors are asking why the stock is falling. Obviously, when we buy into Tesla, we expect the share price to steadily go up. Isn't it supposed to be a $10 trillion company in the future? Well, today we're talking about the real reason why Tesla stock is falling and if this is a buying opportunity or if we should sell. Also, we'll talk about Tesla's bull and bear case for 2025. Where could the Tesla stock end up? So, welcome to my channel where I give you the latest Tesla news. So Tesla stock is down almost 27% as I'm recording this. The S&P 500 index is down about 8%. That means that Tesla has underperformed the S&P 500. There are several reasons why Tesla shares are falling in value, and let's talk about it. Not sure if you have listened to Tesla's earnings call. Elon is an incredible motivator, and of course, investors get hyped by his enthusiasm. However, once we zoom out and look at it realistically, we can see a clear problem. Now, this problem might only be temporary, but if you're holding a Tesla for the future, it shouldn't really make you uneasy or nervous. As we know, Tesla is a very volatile stock, and it takes some nerves to be in this investment. EV demand has gone down, and with the upcoming cuts and incentives, this will not go away for a while. Declining sales in the UK falling nearly 12% in January of 2025, even as monthly EV registrations in Europe's biggest battery electric market surged to a record high. This means that EV sales in the UK are going up while Tesla sales are declining, which also means that Tesla is losing market share. People choosing cheaper brands over Tesla. France, Sweden and Norway decreased in sales as well. In California, the largest U.S. car market with more than 1.7 million vehicle registrations in 2024, Tesla fell down by 12%. Looking at China's sales, they are declining as well. New data for early 2025 shows that vehicle deliveries in China fell by 11.5% in January, while one of Tesla's rivals, BYD, jumped in sales by 49.16%. Tesla is losing market share in China as well. China is one of the most important markets for electric vehicles. It is the only market where people actually want to buy electric, and not just doing it for tax incentives or rebates. Now, the question is, do we still believe that Tesla could be a $10 trillion opportunity or even a $100 trillion opportunity? Well, not today, of course, or tomorrow, but in the future. For now, Tesla is generating 80% of its revenue with EVs. That is Tesla's number one moneymaker for now. With demand falling, obviously the stock price is following. And we'll talk about in a little bit about what will have to happen for this to reverse. Tesla had given out crazy rebates and price fluctuations in the car sales. In my personal opinion, this might have been a mistake. Consumers might be waiting and to see if the price of a new vehicle will go down again, and they might just be sitting on the sidelines waiting. Or some consumers, while waiting for the price to go down, get impatient and might buy something else instead. Also, of course, I totally understand with the pressure coming from Wall Street expectations that Tesla was trying everything to make analyst consensus. But in my opinion, I believe having dramatic fluctuations in price of a product might not be the best thing for a company. And now, with the government incentives going away, some might think twice before buying the high-end version of an EV. Tesla's energy sector segment is growing nicely, but it is relatively a small part of the business overall, just about 10%. Tesla is trying to increase the number of electric vehicles on the road and are taking in return some of profitability down. Eventually, and I think we're getting closer to this, Tesla will sell FSD to Tesla customers, but also to other automakers. I'm thinking within the next 2 years. And I know some have given up on Tesla's lower cost vehicle, which we first remembered as the Generation 2 platform and now the Model Q. I think Tesla is still working on reducing production costs, which includes the cost of metal, glass, and so much more. And Tesla so far has done a great job, as described in their last earnings call. Now, most analysts evaluate Tesla strictly as a car company, not an AI company, which hasn't proven itself 100% yet. Now, if you are in your Tesla investment expecting a large return within the next year or so, you could probably find something not as volatile, safer to invest. My time frame personally for Tesla is 5 years. And yes, Tesla will fall maybe another 50% or more in between. And while some call the stock extremely expensive, there are analysts actually that say Tesla is undervalued. And in the end, it's about how much pain you can handle. And there's nothing wrong with that. Tesla is starting the RoboTaxi business this year with their existing fleet. No Cybercab yet until at least 2026 or maybe even 2027. The Model Q probably not until 2027, I'm guessing. And what about Optimus? Somehow I have a feeling that some of these products could be released together at the same time. And what will the stock price do when this happens? I'm guessing probably explode. BYD is taken over in China because with increased inflation, people are struggling all over the world to make ends meet. Also, there will be a change in tariffs for imports, which makes cheaper EVs out of China a little less attractive in the US. Now, let's see what the Monthly Fool is saying about Tesla's bull case for 2025. So the fundamentals are strong. These days, Tesla is a cash cow. The key to any bull thesis for Tesla stock is a rosy view for a science fiction like future. Investors are betting that the company's artificial intelligence, software, and hardware product development will culminate in an autonomous network for Tesla vehicles, adding an Uber-like revenue stream for the company. In addition, investors are looking for continued rapid growth in electric car, energy storage, and solar product sales. On top of all this, there's hope that the far-reaching technology giant can make money selling humanoid robots. And here's the bear case. While the bull case for Tesla stock is fun to think about, other more skeptical investors worry there is too much speculation and hope baked into the stock price today. Shares trade at a price-to-earnings ratio of about 118 at the time of this recording. A valuation like this leaves little room for potential setbacks, whether they are company, industry, economic or geopolitical related. If shares pull back, as we have seen in 2025, the stock is probably worth buying. According to long forecast, Tesla stock will be in December of 2025 at a low prediction of $508 and a high prediction of $596. The increase is 36.3%. And according to coin price forecast, Tesla will be at $712 by the end of 2025, a 100% plus increase. Wedbush analyst and Ive says Tesla is undervalued by 30.6%. It is a growth stock and not a value stock, and his 12-month price prediction so far is $550. New Street's Pierre Ferrago has a 12-month price target for Tesla of $460 and says the stock may be discounted by 16.6%. Morgan Stanley believes Tesla will end up at $430 but has a bull price scenario of $800 per share. Depending on the development of new products and new releases, or let's say catalysts, Tesla could raise to new highs. Buying a part of a company, which is what you're doing when you're buying stock, means to be prepared for the ups and downs. And as I mentioned before, if the volatility of Tesla stock is causing you anxiety and sleepless nights, maybe you need to keep your options open for other opportunities. There are plenty out there, and there's absolutely nothing wrong with that. Let me know what you're doing with your Tesla shares. Also, share your time frame for holding Tesla stock. Thank you so much for being here, and I hope to see you in the next video. Goodbye.